So much talk about retailers these days, and let's get into another company that is in the retail space. Its 6 monthly numbers were released this morning, 10 o'clock, and the company's name is Iliad. These are half-year numbers. Let me just quickly tell you what Iliad is, first of all. Iliad Africa Limited, listed on the JSE in 1998, focusing on sourcing, distributing, wholesaling and retailing general and specialised building materials. It's been, as far as I can see, through a bit of a sort of period of flux. In the studio now is the CEO of Iliad, and that's Eugene Beneke. Eugene, thanks very much for joining us on Power Lunch. So your numbers seems to show a sign of sort of stability. Revenue up 10%, earnings per share around about 20.1 cents, and that was versus a loss in the previous comparable period. Operating profit 46.3 million versus 11.5 million the last time. So things seem to be getting better.
Yes, we had to make certain significant decisions, Lindsay, during the course of last year with regards to our portfolio. Pleasing for us that for the second reporting period in a row, we're reflecting improved performance trends. Also comfortable in what remains a challenging market with the 10% revenue growth. And there's still a lot of hard work left, and we look forward to continuing this momentum going forward.
Well, let's talk about the way the numbers have been skewed. I mean, I gave that number of 20.1 versus the previous minus 212.2. A lot to do with portfolio adjustments and also impairments. Can you give us more details of those?
That's correct. In the prior year, we provided for restructuring costs of approximately 67 million. Also took a write-down on intangible assets of approximately 249 million. So excluding those once-off adjustments, your comparable base is approximately 3 cents. And from that base, we delivered the 20.
All right, let's get on to the operational side of things. Now, you've got two divisions, general building materials and also specialist building materials. On the general side, you had a revenue increase there of 11.9%, so just a little bit better than the overall figure of 10%. I quite like the way you keep your costs down to a very, very low number. But overall, how was trading in this division?
In general, buildings quite pleased with trading. It's still an intense competitive environment. We've been successful in some of our stores increasing our cash component. Certain regions, there's infrastructure spend or spend behind industries such as the mining industry. So pleased with that. To your point, the expense line, we've contained that despite the fact that we're investing quite significantly in certain strategic projects.
Where do you fit in? This is what I'm trying to work out here, Eugene. I mean, you've got 93 stores. On the one hand, you've got the general building materials, which you've just described. On the other hand, more sort of specialist stuff. And when I look at the other players in the market, it just seems you fall in between a couple of them. Do you find that yourself?
We have a diverse portfolio. 70% of our turnover results from the general building materials division, which is a typical builder's merchant, delivering to the needs of whether it's the DIY customer or more specifically to contractors operating on credit in the residential and non-residential market. Then there's a smaller element of our portfolio which relates to certain specialist stores. So yes, a bit more diverse than some of our competitors. Ultimately, it's most important for us that all of our relevant businesses have the ability or the potential to deliver the desired returns.
Talking about competitors, the competition's really, really tough out there, and I've just got to stay with general building materials if I can, because there are some really, really big players. Are you finding it tough?
It's been very competitive for quite a few years. The fact that we operate quite significantly in the credit market, it's a segment of the industry we've historically operated well. And we continue to compete well. Some of the gains, though, has been through revamping a lot of our stores in conjunction with launching a single brand. That process has started in March this year, will be completed in Q1 2013. All of that allowing us to adjust that portfolio slightly and balance credit and cash a bit better.
Moving on to the other division now, we go on to specialist building materials. Is it because of the higher value of these items that you sell in this particular division that therefore margins are better?
Yes, and in theory, it's clearly why we would want to participate in certain businesses that deliver the opportunity for further differentiation. In the last few years, some of those businesses haven't delivered to that objective. But ultimately, there's an opportunity there for some level of differentiation and high returns.
Let's have a look now at your prospect statement. I mean, it's all to do with the health of the South African consumer and the state of the building market. I mean, in some ways, people say, well, when times are tough and people aren't buying houses, that means they fix up their houses more. Yeah. So therefore, companies like Iliad do well. Where are we at the moment, Eugene?
It's pleasing to see that various key industry indicators, Lindsay, is showing some improvement. It's, however, fair to say that those are marginal. So we're confident that we can maintain these revenue trends of us going forward. It would, however, seem to be incremental growth going forward and not necessarily exponential.
Okay, this may be an unfair question. Do you think you're a takeout target?
I think many companies have been asked that question, and it's something that we as a management team can't have dwell on too much. Obviously, if you trade at a share price that approximates your net asset value, that question will be asked. But at the same time, in this market, there's only so much funding available for business to be taken over, and we have to concentrate on implementing those key initiatives properly and continuing the improved performance trends.